Good morning, viewers. We'll start with the second unit, that is definition. Subject is indirect tax 1, semester 5th semester, affiliated to the University of Mysore. We have already discussed many terms that comes under definitions in our previous sessions. So this is the 19th session of this unit. So the learning objective is here in this definition chapter. Today we are going to learn on the debit note and credit note, and also on the deemed exports. A learning objective is to understand the meaning of this debit note and credit note that are used under GST term, and also to understand the concept for the purpose of levying and collection of the GST. Outcome is it helps the students to understand the term better of this term, that is debit note and credit note, and also to know the concept that helps to determine the GST liability. We'll move to the introduction. As we know, the GST, it is one of the significant step in the field of indirect tax reforms in India by amalgamating a large number of central and state taxes into single tax. GST is applicable on the supply of goods or services as against the present concept of tax on the manufacture of goods or on sale of goods or on the provision of services. So here, in order to make understand the concept better of GST, the transactions that are used, it is better to understand the various transactions that are various terms that are used under the concept of GST in depth. So to calculate the GST liability, in earlier sessions we have discussed the terms like actionable claim, address of delivery, aggregate turnover, business and associated enterprises, and also of GST council. Today we'll see about the debit note. So here the debit note means it is defined under section 34 subsection 3 of the GST Act 2017. So here they say that it is a document that a supplier of goods or services issues to the recipient. So recipient means the person who receives the goods whenever he enters into the contract of buying and selling. So here inward supply, it is the recipient is treated as the inward supply. In the following cases, we see that debit note is issued by the supplier to the recipient of the goods. That is when the original tax invoice has been issued and taxable value in the invoice is less than the actual taxable value. That means when the original tax invoice will be issued and taxable value in the invoice is less than the actual taxable value. Second thing, when original tax invoice has been issued and tax charged in the invoice is less than the actual tax to be paid. Here the type of invoice, the invoice means it is a commercial document that records the transactions between a buyer and seller. In case of types of invoice, the types of invoice means it may include a paper receipt or a bill for the sale, any debit notes, sales invoice, or any online transactions record. Here a debit note and credit note, we see it will include a supplementary invoice. Next is credit note. Here the credit note, it is the section, it is defined under section 34 subsection 1 of the GST Act 2017. It is one of the document issued by the supplier of goods or services to the recipient where a tax invoice has been issued for any supply of goods or services or both. Here the taxable value, when it is issued means when the taxable value or the tax charged in the invoice, if it exceeds the taxable value or tax payable in respect of such supply. Secondly, when goods supplied are returned by the recipient. And thirdly, when goods or services supplied are found to be deficient. In such cases, this credit note document is issued by the supplier to the recipient. In the event of any of the above cases, here the registered supplier of goods or services may issue a credit note to the recipient. Next term is the deemed export. So here export of goods in common parlances, we can say that it means taking goods outside India, or the supply of goods and services from our place, from our mother country to the other countries. Here such supplies are treated as a zero rated supplies under GST. However, the central government may notifies certain categories of supplies of goods which would be treated as a deemed exports. This means that such supplies shall be treated as exports even if such goods are not taken outside India. Uh, this means that the as per section 147 of the CGST Act, supplies are considered deemed exports under GST if they meet the following conditions. Here the condition means the supplies includes goods and the services manufactured in India. Further, the goods produced do not leave India. Secondly, the payment made with regard to such supplies is to be received in Indian rupees or in convertible foreign exchange. And the deemed exports are separate from zero rated supplies. Such exports, they do not form part of the zero rate supplies by default. As a result, supplies categorized as deemed exports are liable to taxes. This means that such supplies are made by paying IGST and are not supplied based on a bond or any letter of undertaking. Further, we can say that the refund of tax paid on supplies are considered as deemed export under GST. It is claimed either by the supplier or the recipient. Here, the following are the categories of supplies that are considered as deemed exports under Section 17 of the CGST Act 2017. Here, the categories of supplies which we consider as deemed exports. First is the supply of goods by a registered person against the advance authorization. Secondly, excuse me, capital goods supplied by a registered person against EPCG. EPCG means here export, promotion, capital goods, authorization. Thirdly, the goods supplied by registered person to an export oriented unit, that is EOU. Nextly, any goods supplied by a bank or any gold that is supplied by a bank or public sector undertaking against advance authorization. Advance authorization means it refers to an authorization issued by the Director General of Foreign Trade, that is DGFT, under foreign trade policy. Such an authorization relates to import or domestic procurement of inputs on pre-import basis for any physical exports. Next is the place of business. It is given under section 2, subsection 85. Place of business includes a place from where the business is ordinarily carried on and includes a warehouse, a godown, or any other place where a taxable person stores his goods and goods and supplies, or receives goods or services, or both. So it is given under section 2 subsection 85. And secondly, a place where a taxable person maintains his books of accounts, or a place where a taxable person is engaged in business through an agent by whatever name called. So here this is the definition for the place of business. Place of business includes a place from where the business is ordinarily carried on, and it includes a warehouse, a godown, or any other place where a taxable person stores his goods, supplies, or receives goods or services, or both. Or the place of business means a place where a taxable person maintains his books of accounts. Or a place of business also includes a place where a taxable person is engaged in business through his agent by whatever name we call, is also known as the place of business. Next is place of supply. It is given under section 2 subsection 86. Place of supply means it is referred as under chapter 5 of the Integrated Goods and Service Tax Act. To decide whether a particular supply is an interstate supply or intrastate supply, one has to refer to the provisions that is contained in the IGST Act in respect of determining the place of supply. So here it is the place where the goods and services are transferred from the supplier to the place where the recipient is located. So it is nothing but the location of the supplier or the location of the recipient. We call it as a place of supply. Next is the place principal supply. That is the principal place of principal supply. It is given under section 2 subsection 90. It means the supply of goods or services which constitutes the predominant element of a composite supply, and also to which any other supply forming part of that composite supply is ancillary. So this is the principal supply. Principal supply means that constitutes the predominant element in a composite supply, and also to which any other supply forming part of that composite supply is ancillary. So this is the meaning of the place of business, place of supply, and principal supply. Thank you.